Well, hello everybody and welcome to your Calgary real estate market update for October. This is a really special month. We've got some interesting market conditions here that we haven't seen for the last 3 years in Calgary. So I'm going to take you through everything that you need to know about our market right now. And I'm going to start off by discussing the average sale price, all right? So October's numbers, this is based off of September's data set, is coming in at just under $597,000, all right? This is up 5.5% from last year, but that stat's just a little bit misleading because in each of the last 3 months, you can see here that pricing has actually come down in Calgary. So we peaked for the year at $608,000 in June, and then in July, August, and September, we've had 3 successive reductions in average sale price to now land at $597,000, which is basically the exact same place that we were at in March of this year when things got really hot, all right? Now, if you look at the red line on this graph, this is the total number of sales, and this always follows a very consistent pattern in Calgary real estate, where after we peak at the very peak spring, summer months, we've got lots of sales activity, the weather's nice, people are happy to move at that time. Well, we get less and less and less as we start to work our way towards the fall and then the winter months. And there's nothing surprising about that. It's just the way the Calgary real estate market works. But if you look at last year, when we had this reduction in sales, this seasonal reduction in sales that everyone expects, the average pricing stayed the same in Calgary. Even though we were in seller's market territory, we didn't see prices increasing on that. It stayed the same at about $500,000 to $70,000. Well, as we worked our way into this year, once we peaked at around that $608,000 and sales started to come down again, we've actually now started to see prices decrease in Calgary for the first time really in several years. And why is this happening? Well, the reason that this is happening is because we're now in balanced market conditions, and we've been working our way there for really the last 4 months, all right? So it's been since April of this year. We had our lowest amount of months worth of supply, 0.94, and then each of the last 5 months from there, we've gotten softer and softer and softer to now basically being in balanced market conditions here in Calgary. So people would be asking, why would this be happening? Why is Calgary now becoming more of a balanced market? What's happening in our marketplace? And there's a few reasons for this. The first one, I think, that buyers are just a little bit burnt out. It's been 3 years of seller's market conditions, very, very tight supply and inventory levels out there. Offers are having to compete with other buyers. You can't have conditions. You can barely see properties. Not a lot to choose from out there. And buyers are kind of fed up with this here right now. But that's what's also happening is that we're seeing interest rates decreasing. We've had 2 different interest rate reductions here this year, and more are expected. And so buyers are kind of waiting on the sidelines because they don't want to lock themselves in when it's anticipated that rates are going to continue to drop. So I think there's just a little bit of buyer malaise and apathy out there. I think the underlying economic fundamentals behind the Calgary market are still very, very strong. I just think this is kind of like a blip on the radar where we're pumping the brakes a little bit and not necessarily a hugely alarming trend for us to worry about. So let's look at a little bit of history here in Calgary and why 2.5 months worth of supply is that kind of threshold between balanced or between a seller's and buyer's market territory. So if you look back to early 2021, and this is 3 years ago, it's the last time we had balanced market conditions here in Calgary. And you can see here, it was early 2021 when we first touched this balanced market conditions after several years of strong buyer's market conditions here in Calgary. So 2019, we had 7 months worth of supply. Very, very difficult to sell a house in Calgary at that time. Then, of course, the pandemic happened, a huge blip on the screen here, 10 months worth of supply. But shortly after that, we started to see the same thing that was happening elsewhere in Canada, more and more pressure on our real estate market. And it was in early 2021 when we hit these balanced market conditions. And to see why this 2.5 months worth of supply metric is the way to go, you can look at what happened to pricing immediately after that. At that same window in time, at that point, if you look at the red line here, the average sale price in Calgary started to work its way up from there as we were solidly in seller's market conditions. Okay, so we will have to wait and see now if this trend that we were looking at with reduced pricing is going to continue for the next few months. It certainly looks like we could have that happen because of the trajectory of this adjustment in the balance of the market right now. It's been very pronounced that we're heading towards balanced conditions. And I want to see if the next few months are going to show us that we're now solidly in buyer's market territory heading into next year. Okay, so welcome break for buyers that have been on the sidelines. Now, hopefully, you can have a little bit more time to view properties. Sellers need to be a bit more mindful of when they're coming to market. They can't just increase the price over the last comparable sale. That's not going to fly anymore. So hopefully we'll start to see some better quality inventory and better conditions for buyers and sellers. All right. Okay, let's jump into some of the news here now. And as I mentioned earlier, the economic fundamentals underlying our market are still really, really positive, guys. Okay, so there's no real cause for concern that we're seeing these balanced market conditions. There's nothing wrong with it because our population continues to grow and is expected to continue to grow for many, many years to come. All right, you can see here the latest numbers are in from ETB on this, and they're expecting an increase of 2.6 million people from where we're at right now to 2051. Okay, that's the equivalent of 2 Calgarys, and most of the people that are coming here, moving here from other places in Canada, and they're coming to Edmonton and Calgary. All right, so this is really good news for our economy, and why I'm really not all that fussed when I see us heading towards balanced market conditions. It just looks like we're taking a bit of a breather here. All right. What has been taking a bigger breather and is looking a lot more tenuous is the Green Line, LRT. So the province pulled its $1.53 billion of committed funding because they didn't like the latest news from the city, where earlier this summer, the city council voted 10 to 5 to shorten the scope and have a smaller green line for basically the same amount of money. All right, so this has not worked out well for Calgary. All of these different municipal governments that want to have their take on the green line, and no one really committing to anything and saying we're going to go and do it and making it happen. And this is what ends up happening as a result of that. People lose confidence in the management of the project. Everyone's got to get their 2 cents in. You dither, you have more and more meetings, and then you end up with funding being pulled from other orders of government. Okay, so that's where we're at right now. I really hope that the province comes in here and resuscitates this. Our city needs this piece of infrastructure, especially with all this growth that's anticipated to occur, but we'll have to wait and see what happens there. We have seen some news with respect to mortgage rates, and this is another reason why buyers are sort of waiting on the sidelines to see what's happening. Are we going to see more reductions and an easing of lending terms? But this is also why I think it's inevitable that buyers are going to return to the market because of these changes to the mortgage rules. Okay, so you can now get an insured mortgage up to just under $1.5 million. All right, and by getting an insured mortgage, it means that your interest rate is going to be lower. Okay, uninsured mortgages have higher interest rates. Insured mortgages have lower interest rates. But in addition to changes on the amount of down payment that you would have to buy an expensive house, we're stretching out the amortizations as well. So we're now at 30 years of amortization for both new builds and existing properties too. So longer amortizations mean lower monthly payments, and lower interest rates also mean lower monthly payments, which is going to serve as a bit of a boost to buyer affordability. So that's really good news. What's not mentioned in this article, but is also still relevant for anyone who's not planning on moving but has a renewal coming up, is that now the stress test that had been part of the mortgage qualification criteria for several years, the stress test has now been removed for loan renewals. So you now have an option to shop around with lenders. Previously, only your existing lender could renew your mortgage without you having to take a stress test. So you were kind of stuck with whoever you had your loan. Well, now any other mortgage lender will not need to apply the stress test to you if you choose to go and remortgage your property with another lender upon your renewal date. So all that stuff is good news for existing homeowners or anybody that's contemplating trading up or making a move here this year. All right, so that's the market update here for this month. Balanced market conditions here in October. Are we going to see buyers market conditions over the next few months? I think we probably will. But as always, if you've got questions about your journey, whether you're a buyer or a seller, we'd love to help you out here at Redline Real Estate. Feel free to get in touch with us. And thanks very much for watching, guys, and we'll see you next month.